Hi, I'm Trudy Wilson, broker at REMAX Eastern here in Bridge North, north of Peterborough. And I have with me today John Helliker, who is a mortgage broker with Dominion Lending. So, and John, this isn't a new career for you. You've been doing this for a long time, right?
Yeah, I've been lending for 20 years with two other major banks for almost 10 years each, and then I went out as a mortgage agent with Griffin Dominion Lending 2 years ago, actually.
Oh my gosh, has
So
it been that
this is
long?
the next chapter, and it went quick. So
Wow.
thank you. Glad to be here with you.
Yeah, well, we were talking on the phone the other day about what's been happening in the marketplace with this pandemic that's going on. And I thought maybe people out in the world that are sitting at home might want to know what this means for them. And I know some of the things we talked about was, I mean, we saw that the interest rates went down, but I wasn't sure what your thoughts were on what that meant for people's ability to buy.
Yeah, so definitely the interest rates have been a real roller coaster, like everybody's lifestyle right now. So a little bit of misconception sometimes is when rates drop that more people qualify or people qualify for more money. Realistically, because we still have to lend based on the stress test, the amount that a customer qualifies for is based on that stress test rate, which is set by the average of the major banks, and it's a government number that's used. So as much as the consumer does get a lower payment and feels more comfortable and they can afford more, the government actually restricts us from qualifying them for more at that time. The good thing is every time rates go down, we get a lot of positive press. We get a lot of happy people, and it brings more people to the market. So that's positive. That's great, and that's what we want to hear. Everything positive, load it up, keep it coming.
Yeah. So, like in the past, I mean, we would pre-approve people, and then when the rates would go down, we'd say, now you can go with the lower rate. But I guess something happened, and so if people were pre-approved prior to a certain time, you're saying that they're going to have to go through the process again. Is that right?
Yeah, great. You know what, that probably is the biggest the biggest message we need to get out right now is if you were pre-approved, then really that pre-approval might not be as valid as it was maybe a year ago, or the process is different. In a pre-approval, not all lenders, not all mortgage professionals validate your income. Some take it at face value, some get pay stubs, but then they still have to be validated again when you actually purchase a property. So pre-approval says, yeah, Trudy, you can go buy a house and spend $480,000. But it doesn't add an address to that. It doesn't add the particulars of the property, and it's still up for due diligence and verification when you do make an offer. So the challenge you have with the existing pre-approvals are, if something's changed in your employment, maybe you're on reduced hours, maybe you're off work and receiving the Canada Emergency Benefit, those things will impact your pre-approval. At times, some lenders and banks might not proceed based on the change in your scenario. So pre-approval is great if nothing's changed. Unfortunately, nobody's life has not changed in the last 60 days.
And that was even true for people that had their approvals. They've removed their condition of financing on a purchase. Their closing isn't for a little while. Then COVID hits, and
Yeah,
then the bank says what?
yeah, those are scary. It's the only way to word it. We sit on pins and needles for them. So different banks are treating them differently. Different lenders are treating them differently. And it's also going to be potentially dependent on how your mortgage professional handled your file. If they had all of the income due diligence and confirmation done up front when you made your initial purchase, then most lenders and banks are proceeding with no issues. They realize the long-term implications, how life-altering it is in a chain of sales, and how much can be impacted. So they will do everything in their power to make that file go through. At the end of the day, though, if you are not working, it is a potential issue. I'm not going to say it's going to halt the deal, but it is something that you need to get in front of, and you need to contact your mortgage professional and ensure that it's not going to be an issue, or find out from them what alternatives you have. There's usually an alternative. There's usually a workaround, a way to work through it. The key is don't leave it to the last minute, or we'll all have a problem.
You mentioned the chain.
Yes.
So you could be okay, but if you're banking on the proceeds of the sale of your house and somebody else down the chain isn't okay, then
yeah, and it's really hard for us to protect ourselves from other people's lack of due diligence, them not getting their ducks in a row. So yeah, unfortunately, you probably have as many sleepless nights as I have right now, considering these things.
I know.
I think it's just really good if you're working, like yourself, a good realtor, you're asking the right questions. So you're going to go back to the other agents as well and make sure that they're asking the same questions.
Yeah.
And this is really a time when everybody has to work together in every transaction.
Yeah.
If there's 2 agents involved, or there's five deals and 10 agents, everybody's got to be on the same page, working together, in my opinion. Trudy, is the other thing that even when I'm doing it, sometimes in a regular transaction in regular times, we sometimes overlook is the law offices involved. And we really all should be reaching back out to them. They're working on reduced hours. They're working on trying to social distance, remotely close files, things like that. We need to ensure that they are on the same page and they're getting their administrative work done ahead of time. The big challenge we have right now with all the lenders is their administrative staff are pushed to the brink. They're trying to work remotely in some cases. Some of them have been, we'll say, repurposed or reassigned to different tasks within their organizations. Maybe they're all working on payment deferrals, so the lending side is maybe at 25% staffing. So if the lawyers and the law offices aren't ahead of that and trying to get their documents in line ahead of time, we're going to have challenges on closing. And the challenge only comes up if there's a challenge and an issue. If we don't know till 3 o'clock the day of closing, we're really under pressure, and it's really hard for everybody to get it done. If we know a day ahead of time, we can work through a lot of things.
So like when we're preparing our offer, then, I mean, you suggest like reach out to the lawyer ahead of time, find out if they can accommodate our closing date, ask them what kind of title search time they want. But also we're going to be putting in, for financing that condition. And you were saying that the process has changed. So normally, I mean, things have changed obviously over the course of years. Like I remember years ago being able to do a deal with, a 3-day financing condition. And that's just, that kind of went, changed when the underwriters were getting a little more stringent. But now you're saying the process is even more involved. And so we're going to need so typically now we're doing 2-week conditional periods for financing, but I understand that you probably need more than that now. So
2 weeks, I understand, is a lot to ask for, but we're in extraordinary times, so it takes extraordinary measures from everybody. 2 weeks, honestly, I would hope would be enough. The thing we have to look at, and we've talked about this lots actually over the years in your office and one-on-one and in meetings, is it depends on the type of transaction. If they're buying a single family house in the city or in a village, it's probably a more straightforward process. They work in a government job, they work in the school board, educational system, they have pay stubs, job letters. Those files are still going together fairly easily, fairly rapidly. When we get into a more unique scenario, maybe it's a higher value waterfront property where the purchaser maybe doesn't live in the community. So we've got to deal with getting documents from them. They're in the city. They've got to get them to us because all the lenders are asking for documents up front now. So income verification, pay stub, job letter, T4. The property itself, they're probably going to need an appraisal on that. That's another partner in our transaction that we've got to, work with The appraisers are not, they're being asked not to enter the properties. So they have to visit the property. They would get photos from you or from the homeowner, the current homeowner. So a little bit more due diligence there. And yeah, at the other end, at the lender's side, back to staffing changes. The banks have removed people from their centers and they're all working remotely. There's technology issues, there's slowdowns, there's extra validation. I mentioned it earlier, I'll mention it again. Extra income validation right up to the last minute. They're doing more direct job checks. So again, 2 weeks hopefully should be enough for that, but we need to all cooperate and work together to make sure that I can get the paperwork properly. I can get good quality paperwork, meaning that the pictures from your iPhone, unfortunately, aren't accepted. I need, true PDF files, things like that to process them. So back to your initial question, 14 days should be good. But we do need that 14 days.
Yeah.
Cutting it back to the 5 days that we had gone to will be a challenge.
Yeah.
Maybe that'll be good. Maybe through this, we'll all get more time when it's all over.
Right. Because people expect it, right?
Yeah.
It's our new norm.
Yeah. That'd be nice.
So that's sort of speaking to the people that, need to buy and sell right now, but there are people that are holding off. So we've got buyers that, might want to wait until the dust sort of settles or until this is all over. What would you say to them in terms of getting their ducks in a row? We kind of talked about income taxes.
Yeah, income tax is huge. So, typically it's self-employed people, but not always. So self-employed, small business owners, people that are on fluctuating income. So maybe you're not self-employed, but you're in an industry like an esthetician. You work, maybe you're a server, maybe you're a tradesperson that works for a contractor and your hours fluctuate. For those people, we need your income tax done because they validate your income based on an average of 2 years worth of income. So all of those things have to be done. We need your T4, your T1 general. A T1 general is the document that you or your accountant or tax preparer send to Revenue Canada. We need that document to show the sources of income. The notice of assessment they ask, that's what Revenue Canada sends back to you after you file taxes, that confirms that they agree with what you sent them and that you've paid them what you owe them, or they've paid you, hopefully, what they owe you. So income taxes are huge. The other thing that would probably be not top of mind right now is save your pay stubs. As we go through this, because maybe people were on reduced hours through some of this, the lenders will be asking for more history on your income. So whether it's bank statements or actual pay stubs, those will be important documents.
Yeah.
So to prepare yourself, stay in your job. If you're offered a voluntary layoff and you know you're going to want to buy a house, try to avoid the voluntary layoff. Stay in your job if you can, and keep your income documents and do your taxes. That would be the key.
Even though the government says we don't need your taxes now, the lenders do.
That's right. There's two sets of rules. There's what the government says, and then it's what the person that's writing you the check for your house says.
Right.
And the person that's writing you the check, they sometimes can demand more than what the government says.
Right. What's the biggest takeaway that you want to leave us with, even if it's just a recap of what we've talked about?
So the biggest takeaway for me with this whole pandemic thing is it's really equalized society. And I don't mean to be too philosophical, but it's proven whether you're a Hollywood star, a professional athlete, you're a realtor, a mortgage professional, or you're a server. We're all equal. Yeah. We all have to play by the same rules going through this.
Yeah.
But back to directly what we're talking about, I think that the housing market, we've proven it. We've been in this thing for 6 weeks and the market's still moving. Mm-hmm. The industry is very resilient and it will continue to be resilient. The people in the industry are very fluid. They've been able to maneuver the changes in the way we're doing business very quickly, very efficiently, and very professionally. So I think that's the big thing.
Yeah. So
thank you very much for having me, Trudy.
Yeah. Thank you, John Helliker from Dominion Lending.